Good morning, everyone, and welcome to this first show, Navigating Digital Payments in 2030. It's the first event of a series, and we are really happy to welcome you on board. This event is really the first of a series of events that Worldline will organize and set up. The idea is really to share with you the latest innovation in PayTech and digital solutions together with our internal experts, but also partners and industry experts. So today I will be joined by a strong panel of diverse speakers. There will be leading experts in payments, digital inclusion, and also European regulation and sustainability. So keep posted because there will be 4 speakers and all of them will give you their perspective from very different angles. We will hear insights around developments we can expect in payments and transactions over the next decade. And also they will discuss how those solutions will make it inclusive and sustainable. So first, I will introduce David. David Daly is our editor-in-chief in Worldline Scientific Community. And this community recently released results of a very interesting study exploring the major trends in payment industry. So, hi David and welcome. So David, can you tell us please what are the key findings of this study and, well, what trends do you see forthcoming?
Sure, thank you Anne-Celine. And I guess first I want to say it feels really great to be here, and obviously I want to extend a warm welcome to all of our remote viewers as well. So, as you said, I look after the scientific community here at Worldline, and this is really a close-knit community of people who come from all different parts of the business, different countries. They all have different backgrounds, but the thing that really joins us together is that we have this passion for innovation, for thinking about the future, understanding where things are going to be going, and then thinking, well, what does that mean for Worldline's clients, and how can Worldline best support our clients with that journey? And as you said, last month we published quite an in-depth study where we set out the key trends that we think are really going to shape payments, the way people shop, the way people transact over the coming years. And in a few moments I'll share some of those trends with everyone, and also a sort of vision for where we think payments could be transformed in the next decade. But first I want to share a different story which just highlights, I think, how much change there has already been in the world of payments. So this is a photo taken in 1982, and this is actually me. I'm the child in the photo, on holiday with my parents in North Wales in the UK. We went on this camping trip every year. It was great fun. I have great memories. We would play ball games. There was a stream running through the campsite that we'd play in. We could go walking in the hills. But I also have another memory, and that's that the week before we went away, my mum would have to go into a physical bank. She would withdraw £100 of cash. It would go into a box. We would take that box with us, and that would be our spending money for the whole week. Every transaction, everything we bought would be bought with the cash from that box. And that's just how things were back then. I looked back at the statistics, and in 1982, 92% of all transactions in the UK were using either cash or cheque. And actually almost half of people were still receiving their salary in the form of cash. So how does that compare to now? Well, I now take my daughters camping almost every year, and it's a much more digital experience. We can book online, we can pay with card or a mobile phone, and of course we get Wi-Fi at the campsite, which is becoming increasingly important for my kids. And those changes are reflected in the change we see in habits. So again, in the UK now, only a very small fraction of people, 17%, are transacting using cash. Almost all transactions have moved to cards or other digital methods of payment. And if you look more widely in Europe, nearly 90% of people now receive none of their regular income in cash. So you see there's been a big change away from kind of physical currency, cash and checks, into digital payments. And the question is, well, where is that going to go next? What's going to be the next big change? And that's really what we were trying to answer in our study. So in our report, one of the main conclusions we reached is that the really significant changes we will see in the coming years are going to be those that help businesses provide a really fantastic experience to their customers. And you might think, well, why is that going to drive change? Well, it's because customer experience and providing a good customer experience has been linked to business success. So we've got some statistics here. Brands that improve customer journeys see their revenues increase by up to 15%. Companies that are providing the best customer experience outperform the S&P index, giving triple the returns. And the top 10 brands for customer experience saw a year-on-year revenue and profit growth that was 4 times higher than those ranked in the bottom 10. And when you think about it, for any business, at some point, you need to collect payment for the goods or the services you're providing. So that pay experience actually forms a really critical part of the overall customer experience. And why is it critical? Well, it's critical because that's the moment when the value exchange really happens. It's when someone who was just browsing becomes a buyer, or someone who was just a prospect becomes a purchaser. And I like to think it doesn't just matter for the seller, for the merchant, but it's also a really important moment for the consumer, because that's when you think, yes, I've made the decision, I've booked the holiday, I've bought the car. But it turns out that providing that really great pay experience is not so easy. And that's because there's this important duality that exists in payments, which is that the payment landscape is really complex, whilst on the other side, the experience that people and merchants want has to be really simple, really intuitive. And in our report, we looked at this through 3 different axes of duality. So the first one is unification, taming, diversification. So huge diversification in payments, many more ways to pay, not just cash, checks and cards, but mobile payments, digital currencies, QR codes. And of course, many more actors entering the payments industry. So where we once just had a few highly regulated institutions, now there are tens of thousands of fintechs entering the market. And then the other side is, how do you unify that? How do you blend together those experiences to make it really simple and easy for consumers to access? The second axis is seamless interactions amidst accelerated digitalization. So digitalization, of course, has always been ramping up, but I think recently we've seen that accelerated by the pandemic. And that means everyone is now living their lives in a way that is more digital. And of course that brings benefits, but it also brings new challenges, new risks, because with more going on in the digital world, there's an increased risk of digital theft and digital fraud. It also can lead to an increase in the digital divide. So whilst for some people doing things in these new digital ways is really exciting, they like it, it's more convenient, some people don't like that. They find it less convenient, and maybe they can't afford the devices they need to access those services, or they don't have the skills to be able to access those services. And that same accelerated digitalization, on the other hand, is enabling these new seamless, frictionless experiences like checkout-less stores or autonomous payments, where an AI bot can make a payment entirely on your behalf with little or no input or interaction from yourself. And then the last axis we looked at was implicit trust from regulation. So again, in payments, we have a very broad and complex regulatory landscape that's continuing to evolve, and I'm sure Andrea will talk a little bit more about that during the panel discussion. And that's one side, but on the other side, you know, a consumer, a person doesn't really want to have to read 50 pages of an end user license agreement. They don't want to have to understand GDPR. They just want to know that their money is safe, that it'll get to where it needs to go, that their data will be stored securely, that it will be treated and used in a way that is fair to them and that they're happy with. And so then across all of those different trends, we identified that in the near to medium term, that complexity side, that's only going to increase, only going to become more complex. And also consumers are only going to be demanding experiences that are simpler, more intuitive. And so between those two, we have what we've called the pay experience gap. And that, I think, gives a real clue about the trends that are going to become really important, because it'll be the trends that help businesses bridge that pay experience gap. But the other thing I like is when you look at how some of the individual trends will combine, converge, interact. And when you do that, you can start to see what the significant changes will be in the future. So we're now seeing, I think it's fair to say, this real political convergence around the fight against climate change. And again, with the outcome at COP26, we could probably all debate, and I'm sure we will later with Eleanor, whether enough is being done, whether it's being done fast enough. But really no one doubts now that something has to be done, and there is an urgency to it. And at the same time, consumers, particularly younger consumers, they want to take sustainability into account when they're buying things. They want to know that what they're purchasing will somehow have a positive impact on the environment. And then you look at the rise of usually unregulated cryptocurrencies, and that's prompted a reaction from governments and from banks who want to kind of provide a more stable and more regulated alternative in the form of CBDCs. And you put all of that together, and I think it becomes very likely that we will see a kind of eco-digital currency. So a way for people to transact that is more ecologically friendly than payments are today. But also you can imagine then they'll receive their income using this digital currency. They'll make all their payments with this digital currency. And it might, just like now it seems strange that 40 years ago half of people were receiving their income in cash, we might look back at today and say it was very strange that so few people were receiving their income with a digital currency. And I think once that happens, you can also imagine that taxation and tax incentives could start to be implemented as programmable money layered on top of that digital currency. And to take just one other example, if you look at hyperautomation, which is using AI to automate increasingly complex tasks, and then you see the rise in APIs, the huge growth in IoT devices all around our homes, and also this new kind of privacy-preserving technologies which allow computation to be done on data while still preserving the privacy of the people or the businesses that have provided that data. And when you add that all together, I think you're going to see really sophisticated virtual agents that can do a lot for you. So again, we might look back at today and think it's crazy that we were ourselves placing a shopping order online, because actually with the devices around the home and the knowledge of our spending habits and knowing which retailers we've got loyalty schemes with, actually your food shopping will just be ordered automatically for you, and it'll just arrive at a slot that is convenient for you. So hopefully that's given a little insight, a quick tour of some of the trends that we identified in our report. But I do want to just loop back around to that topic of the digital divide, because when we talk about some of those future ideas, some people will find it exciting, but for many people it will actually seem scary. It'll be a world that makes them feel uncertain. And that's a reason that we launched a few weeks ago the Payments Digital Divide Survey. So with this survey, we're really trying to understand why people choose different payment means, and also why they might not be comfortable with certain ways of paying. And we're doing that so that we can make sure the future of payments is as accessible and as inclusive as it can be. And of course, it's also why we've invited Karen along to talk some more about the digital divide and inclusion. So I'll wrap up there. I want to thank everyone for listening. I'm really looking forward to the panel discussion in a few minutes. And now I'll hand over to Karen.
Thank you.
Hello, can everyone hear me now?
Karen, you can go on. We can hear you very well. And thank you for
Oh,
being
right, I
here.
can't hear anything. Sorry. Yeah, to pick up on a few points that David talked about, my research at Newcastle involves leaving two relevant projects, large projects. The one's called FinTrust. So, as you can imagine by the name, that looks at trust engineering in fintech specifically. So, this includes looking at the algorithms we're using, how we build trust into technology, which is not simplistic for the engineers who'll be listening, and also Finclusion, which was funded by the Gates Foundation in conjunction with the Alan Turing Institute. And specifically, that was looking at how vulnerable groups can actually become part of the digital world. Specifically, the government in the UK have moved to, you may have heard of the universal credit that's payment to people who haven't got employment at the moment, and that has been recently digitized, which has caused problems because not all the people in receipt of it actually have a basic bank account into which the digital payment can be made. And this is what David is alluding to and why I got involved in helping look at the survey and distributing it. But when we talk about the digital divide, there is a slight overlap between financial inclusion and the digital divide because they go hand in hand. If you don't have access to a digital device or have sufficient funds to, say, make the choice between do I put food on the table or do I pay for an internet connection in Europe or in the UK, then these are difficult choices. And what we found is looking at data from the Good Things Foundation, who are a not-for-profit organisation who are specifically helping people with skills, etc., to become more digitally. We find that 7 million people in the UK, so I'm just talking about the UK, are not actually got internet access at home. And even if they did, what they found in research offline is that 9 million of these people still don't have the skills, even if they had internet connection. So when we're talking about the future of the payments, like David said, while some people would find this really exciting, for other people who have perhaps literacy issues, this is a rather challenging area. And I'm actually part of the Digital Poverty Alliance in the UK. We met yesterday with the government to talk about how can we collaborate to address these issues in the future and reduce the barriers. But if I want to return a bit more to what we were saying about the mixture now, the digital divide goes across the economy, societal issues, but also now ecological systems. And Elena will talk a bit more about that. And we've all heard the much bandied measurements of environmental, social governance and sustainable digital goals drawn up by the UN and talked at COP26. However, my role in my research is to sort of take a step back and look at the antecedents. Are we making the right decisions in the data that we use? So part of FinTrust is we know there's bias in the data sets that then go into the training aspect of machine learning and aggregated up to AI in your hyper automation. But are we asking the right questions as engineers at the design phase about ethics of the data and also digital? What are we using it for? Where does the data come from? And how do we use this so we don't get exclusion? So what do I mean by exclusion? I did a survey with the Astor Foundation in the UK who kindly granted me access to their clients. Now, their clients are what the FCA would term vulnerable customers, i.e. they have characteristics related to health, lifestyle, resilience and capabilities to access the digital and be part of it. And the current figures from the FCA show that approximately 53% of UK residents are showing symptoms of vulnerability because of the combination complexity of Brexit and of the COVID outbreak. And also, when we had the furlough scheme in the UK, for those who don't know, in the UK, it was to support businesses to make sure we didn't get high unemployment, which we seem to have achieved. But people are finding it more difficult, and we just had the inflation rates up to 4.2% today. So you can see the balance between the economy, the social, and then the impact on the environmental. How can we make all these choices together? And David is quite right. When we've done research in FinTrust, what people want is this frictionless interaction, and they don't care so much about the trust aspect or privacy or security until it goes wrong. If they're scammed, if they're hacked, that's when it becomes important, and that goes back to the antecedent questions. Are we asking the right questions in design to make sure that we're inclusive? And also a simpler example is the credit scoring system. In the UK, when we've looked at that, there are hereditary biases because humans psychologically are biased creatures. We make judgments all the time, and this necessarily goes into how we construct our data sets. So therefore, the credit scoring system at the moment is modeled around the heterogeneous 1950s, 1960s family, which, as David showed, has changed dramatically now into our current era. And therefore, the model isn't fit for purpose, but we're still getting people who were refused. And what came out of the survey with ASTA, to circle back to that, is that one of the biggest problems they have when they're residing on the margins of society, i.e., their identification, proving who they are, is remarkably difficult to become included. So if you don't have, in the UK example, a driving license, a passport, and proof of residence, you really struggle to fit the bank's KYC regulations from the FCA to make sure you're doing your due diligence to upload customers to use digital payments and open banking, etc. On the other hand, speaking to community banks and credit unions, there is a remarkable uptake of open banking, but this is premised on being introduced to them by that trusted body, so by the credit union, by the community bank, to enable people to understand, as David said, reduce the fear factor of this uncertainty around using digital. So what we're finding is there is a reduction on the level of unbanked people, according to government figures, to less than 1 million now. But that's still a lot of people. And we still find that in the education system as well, which I'm posited, that children that we saw in the pandemic, 25% of what we would deem people coming from these marginalised or vulnerable groups, 25% of children do not have access to the digital or have the skills. And 68% of teachers say that they don't have access to devices and skills themselves to actually educate the generation. So you can see, as David talks about the complexity of the payments section, if we're having this generational issue of constantly the children coming up from those areas are digitally divided, but also at the other end of the scale, people who are vulnerable because of illness and health and life events that they can't use it. So a high percentage of the elderly population are not digital unless they've got supporting carers who can actually access the digital. So in the future, what I think, because I lecture in innovation and enterprise around fintech, that we've got the opportunity to make it much more people-centered, to have people at the center of these developments and understand what it's like. I didn't understand what it was like to be entirely marginalized as per the clients in the ASTA Foundation, but the insights I've got from them around this difficulty with ID, which leads to more distrust in banks and even the more innovation payment sector because they don't have a branded name. The flurry of new fintechs doesn't necessarily build trust because they don't know the brand. So these insights from people and groups draws us together to say that we need to work collectively in order to change and make sure we move together. Because as we rush towards the cashless society, we have this big area of we can't just leave people who have been transacting in cash left alone. And although we say it's 17%, there are other figures around that to say even though it's at 17%, 51 million people still accessed a cash machine to withdraw cash. So there's questions to be asked around how we're using ethical design up front to make sure that what we build in the future is inclusive and takes account of how society is changing. Companies need to understand the ESG space. So it's not just environment, it's also the social around people. How do they take people with them? And then it has to be sustainable. Now, this also creates a wicked problem for companies because how can they do all this and meet regulations and make sure that they keep customers onboarded? So I think, again, with working someone like Worldline to share best practice through their scientific community and get best practice out there, we can then start to embed it with governments and that becomes policy. And through groups like the Digital Poverty Alliance, which is a huge collaborative group, people from all different domains, that we can actually start to make a difference. Because if we're moving where governments are starting to move payments purely digital, then something has to be put in place to safeguard people and bring them up to where they can use digital. I think it's definitely going to be hybrid for a while because People use cash for all different reasons. And what came out in the survey as well is if you're vulnerable, like you've come from an abusive relationship, then cash is a lifeline because your partner can't track what you're spending until you get out of that relation. So there's also lots of different issues and social factors that need to be weighed in how we use digital payments. And we did a prototype looking at how did we do verifiable credentials for people who don't have the usual ID. It is very much a prototype, I'll have to say, that was funded by the Gates Foundation. So we used their ION software overlaid on the blockchain to say have the NHS in our example as a verifier of whose person's ID is, because in the UK, somebody will undoubtedly come in contact with the NHS for mental health care needs, physical health care needs, etc. So we did very much a prototype of how this would work. It is a first step. I want to stretch that. It's not perfect, but it shows that this sort of application can be used to move forward to be inclusive. Again, it's precluded on having a device, having the accessibility to connect to the internet. So these things are something that we are trying to work through. But I think that Worldline are taking steps forward to be aware of that and also looking at the future trends, which I agree will be around ease of use and frictionless payments. But what we need to do is make sure that we don't lose sight of that there is this fear factor of the digital. And therefore, if we collaborate, if we get in a sense through the survey, there will be a gap there of people who can't access the survey to tell us what it's like. But if we've got access to places like the Astor Foundation or Joseph Rowntree Foundation in the UK, we can start to build that holistic picture and then build informed technological solutions that will help everyone get access and share going forward.
Thank you very much. So thank you, Karen and David. It has been really insightful to get your views more on the tech part and on the digital divide, as you just explained, Karen. We'd like to continue this show with welcoming two additional panelists, very specialized in other areas you already mentioned. So together with us in Paris, there is Andrea Tussino. Andrea is a consultant. She's Director of Studies, Prospective and Training at Partelia Consulting. She's also a country ambassador for France for the European Women Payment Network. And she will guide us through and give us her view and the European view about all that is related to regulation when it comes to digital payments. And on the other hand, we'll also invite and welcome Elena Doms. She's remote and in Belgium, and she's leading sustainability, strategy, and finance at MasterCard. So she will give her view about what you just mentioned, Karen, about sustainability and how to mix and match and take the best of digital payments and become even more sustainable. So we'd like to get your insight. We'll start with Andrea, and maybe you can start with naming a successful country initiative, part of EPI's strategy, and then we will maybe ask you another question and give the floor to Elena and finalize with a one question for all panelists to close the show. So what's your view about a successful initiative and maybe how to use regulation as something positive within these digital payment evolutions?
Thank you, Anne-Céline, for this question, and thank you for your invitation. So first of all, it is important to remind that today regulation in Europe is a very complex environment. We have, for instance, the PSD2, a very strong legislation in the field of payments that aims at bringing more and more innovation in the field of payments ecosystem. I think that PSD2 represents the real balance between innovation and security, with also the SCA evolution. We have other strong legislations in Europe that affect also payments ecosystem. I think, for instance, about GDPR in the field of data, or even AML in the field of KYC. And we have also some emerging legislations today. For instance, some works are done at a European level in the field of crypto assets and also in the field of intelligence, artificial intelligence. So I think there is a very complex and prospective environment in the field of regulation in Europe. EPI that you mentioned in your question is another issue. I think it's an operational project that aims at giving a really pan-European scheme to Europe. So it answers a real geopolitical issue about the European independence in the field of payments and digital. I think it is also a good step for Europe of payments, since it also answers the real fragmentation that we observe here in Europe in the field of uses and habits in payments. So we know, for instance, that today French people love to pay with payment cards, whereas in the Netherlands people like to pay with the SCT, instant payments. So there are some differences across Europe in the field of uses and habits, and EPI represents a very good project to give some answers to this fact. And then I will also talk about another good initiative to foster digital payments in Europe is the works of European institutions. For instance, the European Retail Payment Strategy presented last year by the European Commission, and this report attests that SCT instant payments have to be the new normal in Europe. So I think that we will observe in the next year some real interesting initiatives in the field of instant payment. And we have also another key example, I think, that illustrates the goals of European institutions. It is the works of European Central Bank about CBDC. Digital euro that are also a good example of the goals of European institutions towards more and more digital payments in Europe.
Okay, thank you very much for this global overview of how regulation supports and also gives a framework to digital payments. We talked about the digital divide, and we also wanted to have a view about, digital payments and sustainability. So, Elena, what is your view on this topic? Where do we stand, and what messages do you want to share today?
Thank you for your question, Anne-Céline, and I'm delighted to be speaking with all of you today. So when it comes to sustainability and digitalization, there is a big push towards the so-called twin transition. And David already mentioned that climate action has become now more urgent than ever, and we have seen that confirmed during the COP26 that just took place in Glasgow. But also, David has mentioned that the pandemic accelerated greatly digital transition. Now, why do they go together, sustainability and digitalization? Actually, through digital technologies, we can reduce our global carbon footprint by 20% already by 2030. Because digital technologies can help us measure on a far more granular level, and what we can measure, we can reduce. Now, when it comes to payments, digitalization plays a key role in that respect, because payments enable commerce. And according to some research, 60% of global emissions come from global consumption, from all the resources that are put into the goods that we buy. And according to the World Economic Forum, 80% of consumers want to reduce their impact. But according to another interesting research that has been done by the House of Marketing in Belgium, apparently consumers say they want to buy sustainable goods. But when it comes to making a purchase, they might not follow up on that decision. And, surprise, that is especially true for younger consumers. Now, that might seem counterintuitive, but actually there are a lot of reasons for that, like lack of instant gratification or other inputs that come into making a decision regarding the purchase. And I believe that that's why there is so much work around nudging consumers and helping make sustainability easy for them. And that's where digital technologies can play a key role, because they can show consumers carbon impact of their purchases, they can encourage them to make better choices next time, and they can help them invest in nature-based solutions to offset their impact.
Very much, Elena. So I see that time is flying, because all of you really give a very interesting points of view about your expertise domain. I wanted to ask you, to all of you, one last question about, from your standpoint, from your expertise standpoint, just imagine you had a magic wand and you could have magic happen. when it comes to digital payments, what would you accelerate within the 10 coming years, or what would you really change, to make it happen? And so maybe you can start with Karen, because you are in your domain, you are the most skeptical in terms of what digital payment can bring. So with your magic wand,
I would say I'm kind of counterbalanced. I lecture in innovation, so I welcome the innovation. I just think it needs to be tempered by responsibility. So responsible innovation, would be my thing. So there's a movement now called corporate digital responsibility, which would see that companies are made more responsible about the decision to make about their data and digital within that company, but also by their company. So like it feeds into Elena, they can help their customers see that they're being more sustainable and kinder to the environment by doing that. So for me, corporate digital responsibility becomes a regulated necessity, not just a voluntary commitment at the moment in the next 10 years to build responsible innovation in the payment sector.
For your insights. So maybe, Andrea, you can also give your view, because regulation can also accelerate a lot of stuff.
Yes, of course. I think that one of the key points is information and communication towards end users. So there is a key issue in the field of digital inclusion, as we already mentioned. And I think it is very important today to consider the works about information that have to be done by European ecosystem to foster the use of digital payments in a more and more secure way. We know today when we refer to EPI that information and communication towards end user is a key question, because when you pay with a card, you already have the possibility to pay in a cross-border context with Visa and MasterCard. So why a consumer will use a pan-European scheme? So it is a strong question to guarantee the success of EPI. And we know today that in several European countries, information and communication is already a key point in the strategy of payments ecosystem. Two key examples: France, on the one hand, with the French Comité National des Paiements Scripturaux that has a task force about digital inclusion that is managed by public administration, Direction Générale du Trésor, and also a French consumer association, AFOC. And other example in Europe, Portugal, with the Portuguese Fórum para os Sistemas de Pagamento that presented last year a key strategy for the next 2 years. And information and communication towards end users is the first pillar of this strategy. So there are many actions in this field, such as relations between payments ecosystem and universities about emerging technologies like crypto assets. There are also some key points addressed in newspapers by the Portuguese regulator Banco de Portugal, and also some tutorials to teach the use of new means of payments, like, for instance, instant payment.
Okay, thank you. So we have corporate responsibility, communication, and for you, Elena, what is the thing you'd like to accelerate on your side from a sustainability standpoint?
I would accelerate two things, actually. The first one is transparency of the goods that we buy towards consumers through blockchain and digital tax. So you might have seen these QR codes on fashion or food items, and if consumers scan them, they can see where the product comes from which resources, which countries, and so on. And I believe that this is great because it encourages conscious choices. And the second thing that I would accelerate is simple tools for consumers to help them understand their impact. For example, a carbon calculator within their banking app. Now, what does it mean? I have one myself a couple of weeks, so I can share firsthand experience. Let's say a consumer goes to the shop and buys bread. This purchase will reflect in his banking app in terms of the money that is spent, but also in his CO2 dashboard in terms of the carbon impact of that purchase. The calculator then categorizes all the spend into, for example, groceries, utilities, restaurants, mobility, and so on. And the consumer can see what are the categories with the largest impact. Now, there is also advice and tips within this app. So, for example, when I open my carbon calculator, it tells me if you buy fruits and vegetables, your impact will be 8 times less than if you buy meat. or that global energy still comes for 80% from the fossil fuels. And if I opt in for the renewable energy provider for my home, I can reduce my own impact. Now, when the consumers are educated and encouraged to make better choices, these same tools can also provide them the opportunity to offset their impact by, for example, donating into tree planting or carbon offsets. And I believe this is great because often consumers feel that their choice doesn't matter. But through collaboration, collective action, and simple tools like that, we can really achieve something big.
Thank you very much. And well, David, the last word is yours. I mean, in terms of answer to these tricky questions about the magic wand.
If I look more from a technology perspective, I would say I would use two words, artificial and intelligence. And I think that's going to be where the huge changes are still to come. But interestingly, the tech is not the limiting factor. It's the regulatory frameworks, it's the ways to allow data to be used to train models but protect people's privacy. That really needs to accelerate, I think, in the next years to make it a reality, but also a reality that is good for the whole of society, not just for one or two companies that are deploying those technologies.
Okay, thank you very much. So I would like to thank really the four of you, because it was the first of a series. So we hope maybe to welcome you and your colleagues in the next steps. We also want to tell you that if you have suggestions for the next digital shows about future in payments, please get back to us and we will take it into account. The next show will take place in January. And well, today is also a big day for us because it's the kickoff of our fourth edition of the e-payments challenge. So we will follow up with the e-payment challenge community just after this show. And well, so stay tuned with us. Again, thank you very much about your involvement, because we set it up, I mean, here in Paris, but also at a distance with all the tech, all the setup, which was really tricky, back office speaking. I really thank also the magic team, the magicians everywhere. And well, I think that today we raised also your awareness for the techies about also the societal issues, and what you insisted on, Karen, is really key. There will be a replay if you want to share also this webinar with your peers. You can contact Karen, you can contact Elena, Andrea, or our experts in the scientific community through David. So really feel free to take the best out of it. And we say you bye-bye, thank you, and see you in Jan. So thanks a lot. Bye.